Welcome to the new year here at Freightonomics, where we discuss the freight markets combined with that macroeconomic activity. I'm Zach Strickland, Director of Freight Market Intelligence here at FreightWaves, and with me as always,
Anthony Smith,
Lead Economist.
Lead Economist here at FreightWaves.
Hopefully you had a great New Year situation.
Yeah.
Holidays.
Yeah. It was a good time. I mean, how could you not just sit back and just watch I don't know, I feel like there's so much press coverage and news stories of like how people are celebrating around the country, whether it just be like at home, in public, or just like it was 2018, like in the bar. So
yeah, did you check out that New Year's Eve stuff that in New York? I mean, it was...
I saw the press release where the cops like, don't show up.
Yeah.
Don't come. We'll celebrate next year. But don't come to Times Square. Don't do it.
I don't know why they do it anyway.
It seems horrible. And I've heard horror stories of like people showing up, like having to wear like adult diapers and stuff like that just to like, because it's so crowded and there's like no services like around there. And that seems awful.
Yeah. You know what else seems awful?
What's that?
Being on a container ship anchored out in the Pacific Ocean.
That would also seem awful. Yeah. We have a holiday coming up.
Yeah.
Like our holiday season just ended, but there's a big one in China coming up soon.
Yeah, we do. We have that. And we've got, segue alert.
Yes.
we have our story of the day. And really, this is the story almost of, it's kind of a culmination of the year, really. And it's a good opener to what we are experiencing there in the freight market. We've got, I mentioned all the ships anchored out in the ocean. Well, they're not going to get any chances anytime soon to clear that queue because, as Greg Miller wrote on FreightWaves.com, they are basically not going to remove any services from the Asia to North America freight line for the maritime carriers.
So this is something that's a little bit different than years past, right? Because usually everything just shuts down.
This is, yeah. So, he puts some good stats in here, basically saying that we normally see X percent, I think it was something like, only 2% of the Asia to West Coast service has been canceled so far versus the usual 20%.
That's substantial.
And the way that a lot of the maritime carriers normally control their capacity by canceling or blank sailings, as they call it, void sailings, et cetera, just to, because shippers aren't able to ship anything. Their production shuts down. Chinese New Year, if you don't know, is a huge holiday period in China. The entire country shuts down for effectively a month.
Yeah.
As a lot of the, workers leave the factories, they go back home, they travel. This is when the Wuhan virus, as it was called, so eloquently last year.
Yeah. And I remember last year we went over this topic, before coronavirus really kind of ramped up. Mm-hmm. You were breaking down very eloquently how the Chinese New Year impacts the freight markets. I think we had an entire episode kind of framed around that topic.
Yeah, we did. I believe so. I'm going to rely on your younger brain for that one. But I'm sure we've talked about it numerous times. This is a very big time of the year for freight, especially importers. But normally what happens is they'll import a ton of freight in January, and it doesn't necessarily get on a truck because January is traditionally for surface transportation, outside of rail, really the slowest month of the year for trucking. I mean, it's kind of like, me and Mike Vinson joked about it last on the spot of the year. The week between, Christmas and New Year's, the slowest because everybody goes on vacation. There's just nothing going on. Production comes to a halt in the United States. Just due to vacation period and holiday influence. And then January comes back and you come back into the office and it takes you a good solid few days to a week to really get your head back into the game.
Yeah.
And we've seen that in a lot of our freight volumes and activity so far, but we saw this before the holiday.
Right.
Containers and imports and all that, they were booked solid. The Chinese don't care about our Christmas and New Year. I mean, some of them do, but they don't care that they are, that we're taking a break. They don't take a break. Their break comes here in a month.
Right.
Almost exactly a month, I believe.
And so really historically, when we look at Chinese New Year, correct me if I'm wrong here, we see a ramp up in Chinese production, right? Trying to kind of get around some of that getting ahead of the curve of what is Chinese New Year. And so we'll see shippers domestically trying to get around that because they know things are going to slow down. Now with COVID-19, we're playing this catch up, right, from last year. And now it's mixed with kind of trying to ramp up to curtail what would have been a historical or normal seasonal pattern. So it's just like two diverging trends really kind of amplifying things.
Yeah, they can't catch up from where they were. And we just had obviously our big holiday peak season. No big shocks here from the holiday peak, retail peak. It was strong. I don't think it was quite as strong in December as it was in November, because it looked like everybody was trying to get as much in front of the holiday as possible. And it almost looked like, and I don't want to minimize the fact that capacity was essentially as tight as it was around Thanksgiving, thanks to Christmas. But volumes did kind of peter off. And this is not unusual for this time of year. Overall freight volumes do tend to drop in December, whereas the service requirements for especially the retail freight, the consumer products, gets a lot tighter.
That's right.
And that really has a drag on capacity, as well as, of course, the vacations and whatnot, as drivers and carriers and shippers alike all take a vacation for that holiday time period. But that doesn't mean that all this freight stopped.
Yeah.
It's piling up on the port. They have, I believe, somewhere around 30 ships out at anchor, according to Greg Miller's article, still waiting to be unloaded.
Yeah.
And a lot of, from reading the article, fantastic, by the way, article, it really outlines well what, this might do. This is going to exacerbate a very serious problem out there on the water.
Yeah.
We've already got 30 ships. Normally they use this time to play catch up. Only 2% of the capacity has been canceled, meaning they're just going to keep shipping this stuff. Because I would assume that, and I don't know how this necessarily is going to work, because the factory, the population in China goes on vacation.
Yeah.
I don't know if they are keeping some of that online just to clean out all this container backlog that they have sitting up on their ports on their side, but from what I understand, like they're going to work through it in some way, which means even if they did take that holiday, we're gonna have so much influx of freight still coming into this country.
Yeah. So it's gonna definitely sounds like a working holiday for those of our Chinese friends abroad, trying to really kind of catch up and kind of, I'm sure there's still going to be some slowing down of activity, but it definitely sounds like there's going to be more working holiday hours compared to previous years. Yeah,
and again, the country legitimately, and talking to Henry Byers, I mean, it's the ghost town, like in terms of working and whatnot. So that actually leads us into really what we wanted to talk about today.
That's right. And, also, before I forget to mention, I am monitoring, if you see me looking down at my computer screen, I am monitoring LinkedIn, and here for all of your comments, questions today. Zach is going to intro what we're going to be talking about, and I see everyone's comments coming in. Rodrigo, thanks for joining. Happy New Year. Shane, Dane Adams says he loves my work, and he says I'm very smart. So appreciate that.
Well, I will counter that later.
And of course, as I mentioned, James Fry, who had a quick conversation with him on LinkedIn. Looking forward to our outlook for 2021.
Yeah, and that's exactly what we're about to dive into here in some detail, because I think everybody, it's such an unusual time. The seasonal patterns have been broken to an extent. We had tremendous freight flow in the back half of the year, thanks to the COVID and the pandemic, really changing a lot of consumer behaviors as well as messing with supply chains. But there hasn't been any sign of that slowing prior to the holiday surge. And this import volume stuff is only going to add to that equation. We're going to see freight volumes continue to come into the country. Now, it doesn't necessarily mean that we're going to have the same effect as, say, a Christmas or a Thanksgiving. Like I said before, that freight has service requirements on it. The only thing that's going to move this freight faster is the fact that warehouses are so full. On certain warehouses are very full. Some of them are very empty, and they're trying to get some of these inventory levels built back up from what is traditionally one of the busiest periods of the year. They clean out a bunch of facilities and DCs, and they rely on January as the retail season slows down, January, to really build all that back up, and then not just build it back up, but also prepare for March, April, before they can get those next shipments coming in from across the water. And I think because of that, we are going to see kind of this continued flow of freight. Now, it will contract as it normally does, but we won't necessarily see it retract all the way back down to, say, a 2019 or even a 2020 this time last year. It's too fast, too furious right now to think that January is going to just plummet like it does traditionally.
Yeah. And you say it like, a lot of that's going to be driven by, of course, the consumer. And so with that import volumes, I think that kind of like ties into what we expected with our conversation previously with Chinese New Year.
Right.
And what we're seeing right now with warehousing space. I think we're going to have our regular special guest, Zach Rogers, on shortly. Not today, but
I was going to say, surprise.
in the coming weeks here to kind of talk to some of those points, because he definitely honed in on how some of those trends are really impacting further downstream and really still tied up upstream with some of those manufacturers as well.
Yeah. And that's part of what we're going to dive into. So let's start breaking it down a little bit. I'm going to turn to you here for some sentiment, so we know how you're feeling for this year.
Of course.
But some of the big things that were moving freight in the last year, the big ticket items last year. So obviously we all know about e-commerce. Everybody went to their houses and bought a bunch of stuff. But a big component of that e-commerce was also housing, furniture. Or not, sorry, you don't buy a house online, or maybe one day we will, but, the furnishings in your house, furniture, finishing goods, if you will, they took a big jump, as well as, electronics. Some of these retail goods got more so online than they had in the past. And what do you think that's going to happen there? I mean, the housing market's still strong. People are going to get another $600.
Yeah, don't spend it all in one place.
Love that money. And do you think? What do you see on these specific sectors here in the next 12 months or so?
Definitely. So just starting off with housing, before I even kind of get into my expectations for 2021, should probably recap my expectations for 2020 and how that kind of played out. So going into 2020, I have this article on FreightWaves.com. I think it's...
Never heard of it.
Yeah. Check it out. It's good stuff. It's called Slow Start, Strong Finish. It's a commentary on my expectations. I think it was released December 31st, 2019. So before any kind of...
Sounds like you nailed it.
COVID expectations.
But unwittingly.
Who would have known this would have been the outcome? So my expectations in that article outlined for housing that there's going to be some strong demand throughout the year, and it's going to be one of the catalysts for growth throughout the year. And the main things are going to be that's going to hinder that growth is going to be available lots for building, adequate labor, and just a tight supply inventory market on there. So that's really been the thing for throughout the year. It slowed down just a hair, just I think during March, April, but then it just continued to ramp right back up. And now we're kind of getting towards 2007 levels, pre-Great Recession housing levels on some metrics. And so
thanks for that.
We are seeing a steady ramp up. One of the things that's really kind of continuing that ramp up is, of course, those low interest rates. It's at a historically low level. That's really kind of keeping a lot of people in the game. When we're looking at housing construction, especially for existing homes, there is a very limited supply of those existing homes on the market, especially for looking at entry-level homes and mid-level homes. Those are still very tight. And so that is going to push up the price point for those homes. And that's going to start making new home sales, new builds a lot more alluring, because it's like, am I going to pay X amount of dollars? Usually for an existing home,
right,
you're getting a discounted rate. It's not brand new. But if it's going to be priced so high, you might say, hey, I'm just going to look to build a house. And so when we're looking at housing, and I think we're looking at many of the consumer trends, it's going to be, I think, a tale of two consumers. Those that have been able to successfully work remotely and kind of continue business as usual on an income basis, they're not going to be as impacted. Those are the ones that are going to continue to, provide that upward momentum for e-commerce. They're still going to be looking for homes if they're feeling secure in their jobs or working remotely. Nothing's really changed for them. Now, those individuals that have maybe in the service sectors or in states that are really heavily impacted by COVID and their industry has been shut down, whether it's hospitality, restaurants, things like that, some of those services, they're still kind of, if they were in a position to buy a home, they might not be now. But those that have been able to looking to make a home purchase are still in a great position to buy a home. And so that's really going to continue into, I think, 2021. So we're still seeing that tightening market there. I think if we still see those tightening inventory levels for existing homes, that's going to still keep on pressure. And so I think we're going to see continuous pressure for construction building out throughout the first half of the year and into that summer month. We didn't really have that summer raise as we wanted to see with the housing starts, but we did see a consistent rise. Construction spending still going strong. It's not going to be as strong, of course, for non-residential as we see office spaces and things like that not get built out as rapidly.
Good point.
But warehousing, that's definitely going to be a strong one, of course. But overall, we're going to see somewhat, I think, of a decline or decelerating trend or moderating trend for non-residential, but continuous growth for residential home sales or construction spending. That's going to add some momentum or capacity tightening for flatbed trailer types. And as you mentioned earlier, there's downstream effects. So those new homes get purchased, built, things like that. People are going to fill those new homes up with stuff, whether it be new furniture, which has been a shortage of, backlogs, delays.
That's sitting on those containers out in the water.
Somewhere in the ocean. Yeah. So we're going to see that, durable goods, appliances, things like that. And I think Dooner has a Peloton bike or something like that. So we're going to see some durable goods that are, still going to be filling up these new homes, these new spaces as we move throughout the year. Of course, stimulus is going to be a thing for those that have not been able to kind of secure employment and work remotely. But I think, like I said, it's going to be a tale of two consumers throughout 2021, at least throughout the first half.
So it sounds to me kind of like, we're still going to see this tightness in the housing market. It's going to continue, especially through the first half of the year. And one of course, you mentioned one of the driving factors of that is the lower interest rates, which we're not raising those anytime soon.
Right.
So that's going to keep the housing market relatively competitive until they start raising those prices. And again, God willing, the pandemic subsides.
Yeah.
I don't want to say it can't get any worse, but I'm hoping that we're peaking out about now. But it hasn't appeared to slow things down like it did in the spring.
Right.
I mean, in the spring we kind of shut everything down. Everybody went home and then they didn't come back.
Right. Right.
But we're really not seeing the same level of impact on the economy that we saw back then. And I don't know if that's the fact that, we're focusing on everybody kind of taking care of their own. If you want to go out, go out. If not, now it's not necessarily working very well in terms of curbing the virus, but death rates or mortality is not where it was in the spring either. And I'm not a doctor, so I can't even, speak to why that is, but we are just in that early phase of this, these cases really strengthening again like they did in November. And again, unfortunately, death rates are lagging indicators with the disease itself. So, but that being said, economy isn't taking as big of a hit as it did earlier in the year. And we got another stimulus. Looks like things are going to be okay on that front. And the service side isn't going to get necessarily worse.
Yeah.
As people are starting to get back on their feet. So housing looking good. We've got one box checked.
Yes.
For the economy moving forward. The next sector, the next item, I guess, that's worth mentioning, industrial sector. This has been the sleeper. And this is the one that everybody kind of always points to as like the driving force behind the economy. Well, yes and no. I mean, of course, it's got a big impact, but we just watched freight volumes this year go through the roof.
Yeah.
And depending on the type of freight that you haul, if you're a carrier or the type of, obviously all shippers and companies know they fit into a certain category of what type of freight, and their industries that were impacted very disproportionately throughout the year. Versus some of these other industries, like we mentioned, the home furnishings and the appliance sectors did very well this past year. But that being said, the industrial sector, our production, really dependent on oil, energy, very connected, and we, of course, have become one of the top providers of oil, crude oil in the world in the last decade or so. And when that suffers, so do we as an economy. Now, this is starting to make a comeback, is it not?
It is, and that's one of the talking points we've had, I think, over the last couple of months, is that there's slow momentum building for manufacturing. We're looking at industrial production. We're looking at year-over-year quarterly growth. That's starting to slowly build up. One of the areas that's been ramping up is ISM PMI, the Purchasing Managers Index, that barometer for manufacturing. Anything above 50, of course, indicative of growth, while anything below 50, indicative of contraction. One of the things that we saw just a few months ago was finally when we saw that surpass of 50 for employment. So employment, of course, is going to be a big factor when we look at manufacturing. And some individuals it's important when you're taking into account employment for manufacturing, how to really think about it. So looking at that employment aspect of manufacturing, it's going to put potential backlogs on manufacturing goods and orders and things like that, because if you have to have a factory shut down, or if you have workers having to call out, they're sick, that's going to really kind of put a strain on your capacity to kind of churn out product. And so we did see some employment start to get into that positive area. The most recent area that has really kind of jumped up, besides new orders earlier on or later on in the year, was prices for manufactured goods or commodities. And so those commodity prices are sky high right now on a month-to-month basis. And so that's really going to, I think, have some downstream effects when we're looking at those manufactured goods. In 2020, I was expecting some more business-to-business activity earlier on before the onset of COVID. Of course, that kind of changed things. And we saw this moderating trend throughout the year. And of course, as you mentioned, volumes weren't that impacted by it. And we saw the consumer really come through with stimulus, additional jobless benefits claims,
Right.
and things like that, that really kind of helped support some of those volumes and some of those trends that we saw throughout the year. Going into 2021, really expecting some momentum spilling into the year, whether it's business-to-business activity really starting to ramp back up again. We've seen that PMI starting to kind of ramp back up again. So I think we have some momentum building.
We're back over 60, are we not?
We're over 60,
Which is the highest value in what, 2 years?
It's been, well, it kind of got up there.
Okay.
I think 3 months ago into that level.
Okay.
And of course that doesn't quite mean that manufacturing is going to be at the highest level in over 2 years. But of course, it's the diffusion
Just
index.
expanding rapidly.
Yes.
It's not a absolute value of activity. It's measuring the speed with
Right.
which it's growing or shrinking.
Right.
Yeah.
And so, but it's positive signs for manufacturers. And of course, that's going to be good news for those that are operating flatbed, those carriers, those driver operators and things like that.
Yeah, and the automotive sector is starting to pull back online with a quickness.
Yeah.
Lots of good signs from that sector. Again, not all the way back to where they were
Right.
by any means, but things are starting to click again. Like
Yeah.
it's almost like they've flipped a switch,
Yeah, yeah.
and said, you know what, we're seeing all this happen. We're just going to go forward with it. And of course, consumers are dragging them through it. They're purchasing these vehicles, and again, it's almost like they took their time off. And now everybody's kind of starting to say, well, we're just going to pull through this as best we can. And it's still moving regardless. So, we've got the vaccine
Yeah.
coming out. That is not something I think is going to be very fast. Having a wife that is in the healthcare industry, I know that the distribution, and we had Chris Wolf on discussing this earlier, the logistics. He had a very, it now echoes with me, point about how he thought that it should be more of a centralized, or at least driven by FEMA versus the regional or the local government. And I now see it pretty clearly. The local governments that they're putting this through do not have the infrastructure to manage something like this that needs to be distributed and handled on this scale. You're talking about people that are used to kind of managing a totally different process. Vaccines are handed out normally in hospitals and doctors' offices, and they have certain amounts of flow through. You're talking about health departments and counties. They do not have, there's no playbook for this.
Right.
This is,
Right.
and the personnel, they're not there either. You're
Yeah.
talking about people that normally are handling a lot of paperwork and phone calls and social work,
Yeah.
not distributing a vaccine to hundreds of thousands of people. I mean, Hamilton County has over 100,000 people in it. And you're talking about 1,000 vaccines a day.
Yeah.
I mean, do the math. We're
And the hours of operation, right? That's also going to be another
Limiting.
hindrance.
Yeah, we just don't have the infrastructure for a wide distribution
Yeah.
of this with speed. And it's, so if we're relying on that, we're probably going to need to hold our breath a little bit longer because, again, the vaccine takes 30 days for full potency.
Yeah. And just looking back at our comment section, we have the brilliant Zachary Rogers.
Coming in.
Hey,
he's not on this week.
He's not on, but he's in here. He's in here in the comment section saying, so, Anthony, am I correct in believing you guys think the 123,000 jobs we lost in December is just a blip in the road to reopening? Like Zach Strickland mentioned in an article the other day, we still have lots of inventory waiting at the ports to get back to the supply networks. So
strong points.
Yeah, definitely strong points. We don't think that, I don't think that those job losses are going to be a blip in the road.
No.
And definitely when we're looking at the unemployment number, the unemployment rate, I don't think it's really telling the full story.
Right. You've mentioned this in the past.
Yeah.
Yeah. You've talked about how the employment numbers they're not, you can't look at them like you did before COVID.
Yeah. And some of them just misclassification on those that are going to be permanently terminated or kind of leaving their field and those that are just temporarily laid off. So that's definitely going to be a huge hindrance or potential or a likely or obvious headwind for the overall economic growth.
Yeah, and I think to Zach's point, yeah, those losses are bad, but at the same time, we are seeing more acceleration in the recovery process than we did. Like back in March and April, we were on the downhill. Like things were getting worse. We had so much more uncertainty than we do now. It looks like, especially on those ISM numbers and a lot of the auto manufacturing and of course the retail sales and the amount of freight just moving through the country right now, there is still a lot to be, there's a lot more momentum to the upside than there was back then.
Yeah.
And we're coming out of that hole still where we've got a long way to go, but there still appears to be plenty of, room to grow. And that growth is actually what drives a lot of the economy.
Yeah.
So, I mean, even if we aren't back to the absolute numbers that we were before COVID, the momentum should also help spur the recovery itself. So it's kind of a self-fulfilling prophecy. You know what I'm saying?
Right.
As everybody starts to come back online, and we won't be fully accelerating until the virus is kind of on its way out. Hopefully, sometime early 2021, please.
Well, yeah. I mean, I've heard a lot of course, I'm just an economist, but reading a lot of research saying that a lot of individuals are expecting the summer of 2021 to really kind of be a really kind of relieving moment for COVID-19. Hopefully there's not a COVID-20. But again, this has been unpredictable. But the thing that I am happy with is to see how people have adjusted and how industries have adjusted. And of course, as we mentioned earlier, it's really kind of accelerated a lot of trends that we haven't seen in just businesses that were dying out. They're gone. Those that were on the brink of innovation, they're here. So I think it's really kind of been a great push that way.
Yeah, and just to kind of summarize things, I think we're all in agreement here that the first half of the year, for freight at least, not for everywhere, the service industry still have a lot to be said, but I think that looks a lot more positive there in the second half of the year, which again, there's going to be this changeover of spending from goods to services to an extent. Now, it's not going to erase all this freight by any means, but I think that there's a lot of unknowns around what that looks like. As we were talking about, it's going to depend on how quickly the virus subsides, vaccine or otherwise, herd immunity. And it's going to depend on, what the consumer starts to do with their money. Like we saw it last year. There's all these little unknowns about the behavior of the consumer that we just don't know what's going to happen. Business investment comes back with a fury, and industrial production comes back with a fury. It erases all that consumer behavior. Or it takes over that hole that's left by them spending it on services. And I think that's really the transition that's in question for this. But, that'll about do it for our outlook for 2021 show, Anthony.
That's
and it went by fast.
Yeah. And maybe the individuals that are watching would like to know that I think we're going to be ramping up our Freightonomics broadcasting in the coming months.
Oh.
We're going to be moving to Thursday soon.
Thursdays.
And we're going to be an hour.
A full hour.
A full hour. Back to the hour.
Well, as usual, download the FreightWaves TV app on podcast players everywhere. Just look up Freightonomics or look up Freightcasts and get every FreightWaves podcast, including all of our other fun shows. Y'all have Great week.
Craig would like my Baylor green thermos here.
I don't know. I don't like change like that.
I mean,
You're throwing me off.
I did have to look